On your behalf, I'd like to extend a warm hand of welcome to His Excellency, the President of the Republic of Rwanda, Your Excellency President Paul Kagame. Welcome, sir. Thank you very much for joining us. The President of Uganda, Your Excellency President Yoweri Museveni. Thank you, sir, for joining us. Welcome to you. The Secretary General, Common Market, Eastern and Southern Africa, COMESA, Dr. Cindy Songwenya. Thank you, sir. Mr. Christopher Hudson, President of DMG Events, welcome to you. Mr. Francis Gatare, the CEO of the Rwanda Development Board, thank you very much for joining us. Your Excellencies, distinguished guests, ladies and gentlemen, also if I could say warm welcome to the delegates and representatives of the heads of state that are here with us today. The Honourable Paul S. Dlamini, who's the Deputy Prime Minister in the Kingdom of Swaziland, a warm welcome to you. The Honourable Vincent Seretse, Minister of Investment, Trade and Industry, the Republic of Botswana, welcome. And the Honourable Barry Emmanuel Rafa Troloza, the Vice Minister for Foreign Affairs in the Republic of Madagascar. To all of you, welcome. Thank you very much indeed. And thank you for joining us. Ladies and gentlemen, Mwaramutse, good morning everyone, welcome. Bonjour tout le monde, bienvenue à toutes et à tous. Bon dia, bem-vindo, salam alaikum. Thank you so much for joining us for this year's edition of the Global African Investment Summit. It's a unique meeting place, so for those of you here for the first time, welcome to you. It's a unique meeting place for people to come from around the globe. In the public sector, in the private sector, and very often the spaces in between to afford an opportunity to interact, looking at the challenges that we face on the continent, but more importantly and predominantly looking at the huge number of opportunities that the continent has, a continent that we all acknowledge is on the rise. This is a place where you'll meet the right people, have a real chance to get real business and investment done on the continent. So you're at the right place for the next 2 days to shake things up on this continent. This Prestige Summit has been taking place in London over the last few years, and we're very excited that it's taking off on the continent this year. And this enabled, with thanks to key partners, the government of Rwanda through the Rwanda Development Board and the Common Market for Eastern and Southern Africa, COMESA. Thank you so much for bringing this investment summit to the continent and to Rwanda and this region. Thank you in advance also to all of the speakers that have given us their time and their valuable insights to help stir debate on how we can find ways to fast-track this African economic story. But I'll have more on that program a little bit later on, because I think the best place to start this journey is to introduce a few people, just to say a few words and set the stage, as it were. As I mentioned a short while ago, this gathering has been enabled by three partners coming together. And I'd like to start by calling the host government through the Rwanda Development Board to join us and just to say a few words. And to that end, please welcome the Chief Executive Officer of the RDB, Mr. Francis Gatare.
Your Excellency President Paul Kagame, President of the Republic of Rwanda, Your Excellency President Yoweri Kaguta Museveni, President of the Republic of Uganda, His Excellency the Deputy Prime Minister of Swaziland, Right Honourable the Secretary General of the COMESA, Honourable Ministers representing your heads of states, Honourable Ministers of the Government of Rwanda here present, distinguished participants, leaders of industry, it's with great pleasure that I welcome you all to Rwanda, especially for all of you, our guests. We are particularly honored to be hosting the Global Africa Investment Summit here in Kigali for the first time outside London. This is because of the partnership that DMG Events and COMESA agreed to partner with the government of Rwanda to bring the Global African Investment Summit here in Kigali to leverage the historic tripartite free trade area agreement that was signed in June last year in Egypt. And so the theme today, leveraging trade and investments to enhance regional integration, is pertinent. Your Excellencies, today this Global Investment Summit is taking place to leverage the efforts that the respective governments in the regions have been putting in place to expand economic potential of our continent, leveraging the regional economic communities. But the tripartite free trade agreement, covering 26 countries and more than half of the African population, to be precise, over 620 million people, provides probably the biggest promise for regional integration on our continent. But Your Excellency, when this summit was conceived, it was to take the promise from a mere promise to a reality. And so the people gathered in this room, Your Excellencies, from industry, from government, are here to leverage the opportunities that the governments of the tripartite free trade area have provided to them so that we can move from potential to reality. Your Excellencies, there will be opportunities to look at the business opportunities in agribusiness, in energy, in infrastructure, in ICT, industry and manufacturing and services, particularly trade logistics as well as financial services. All these with a view to enhance the movement of people, goods and services so that truly regional integration can take place. Your Excellencies, we are particularly honored that you have graced this event by your presence as a true testimony to the commitment to regional integration for Africa. We are indeed indebted to Your Excellencies as leaders in government and in business to look into how truly this tripartite free trade area can be made practical. I want to thank Your Excellencies once again for agreeing to also grace the evening, last evening, which I hosted on your behalf to welcome all our guests that already have set the stage for the discussion that will be taking place here today and tomorrow. I thank you again for your kind attention.
Mr. Gattara, thank you very much indeed for welcoming us so warmly to this beautiful part of the continent. It's always great to be in Kigali. It's a beautiful city and a great place to host such important events. And we certainly look forward to hearing on our next panel, actually, one of the panels coming up, on some of the things that you've been able to do through the RDB in Rwanda and in the region as well. Now, as I said, it's a partnership. DMG Events, the creators of this summit, a great idea that came into being, and it quickly took off as an important go-to event. And to say a few words of welcome, please welcome the president of DMG Events, Christopher Hudson.
Thank you, Paul. Your Excellencies, distinguished guests, ladies and gentlemen, firstly, on behalf of DMG Events, I'd like to extend our warm thanks and gratitude to His Excellency for hosting this inaugural on-continent Global African Investment Summit in this spectacular and clearly inspiring city that is Kigali. I would also like to take this opportunity to extend our most gracious thanks to our partners, the RDB and COMESA, who have worked tirelessly to deliver this summit that we are all attending today. As organisers of the African Investment Summit, DMG is privileged to provide this platform to support the existing and future investment into and within Africa, ultimately contributing to the economic and social development of the continent. We hope over the next 2 days, both within this fantastic International Convention Centre and outside of the conference itself, that relationships are built and we continue to see measurable business transactions take place. So again, we would like to thank you all for your kind support, and specifically Your Excellencies. And we really wish you the best of business for the next 2 days. Thank you very much indeed.
Christopher Hudson, thank you very much indeed, the President of DMG Events. And as I said, the third partner in this is the Common Market Eastern Southern Africa, COMESA, one of the important trade blocs, and joining hands to form this tripartite free trade area. And to say welcome and to share a few words with us, please welcome the Secretary General, Dr. Cindy Songwenya.
Thank you, Program Director, Your Excellency Paul Kagame, President of the Republic of Rwanda and our gracious host, Your Excellency Yoweri Kaguta Museveni, President of the Republic of Uganda, the Right Honourable Deputy Prime Minister of the Kingdom of Swaziland, Mr. Paul Dlamini, Honourable Ministers representing our heads of states and government, Honourable Ministers from the host country, Rwanda, Excellencies, Ambassadors and Heads of Missions accredited to Rwanda, distinguished members of both local and regional international business community. I also recognize my colleague, the President of the PTA Bank. Your Excellency, let me join the preceding speakers by thanking you for hosting this first ever Global Investment Summit in Africa. Up to now, this summit has been held in London. But when I met with the colleagues from the events company, we agreed that we need to have it taking place in Africa and not in the United Kingdom, because this is where investment is required. Let me thank you, Your Excellency President Kagame, and also indicate that we look forward to your leadership when it comes to investment, taking into account that your country is among the top countries in the ease of doing business. You have Mauritius, you have Rwanda, you have Zambia, to mention just a few. I would also like to take this opportunity to thank His Excellency President Yoweri Kaguta Museveni, and simply say that, Your Excellency, your presence this morning is a good omen, not only for the success of this investment forum, but for the COMESA, EAC, and SADC tripartite free trade area, which was born in the Munyonyo Pleasure Resort in Uganda, and which should become operational in the near future. We salute you, Your Excellency President Museveni, for your visionary leadership and tireless championing of regional integration, which is ably captured by the East African Community motto, and I quote, "One people, one destiny." Let me move very quickly to address the investors that are here and simply say, as you have heard, this is not only for COMESA, but it's for the tripartite FTA, the 26 countries that are part of the tripartite FTA, with a combined population of 626 million people and a combined GDP of 1.3 trillion United States dollars. Put it differently, the 26 countries, if you were to rank them as one country, they would globally rank number 12 in the world in terms of the GDP. And therefore, to the investors that are seeking markets, or what we call market-seeking investors, you cannot be in a better place than in this region. And I should also indicate that as we talk about the tripartite FTA, we also have the continental free trade area, which is in the making, and all these will create larger markets. And therefore, for the market-seeking investors, all I can say is that you have a large market, a huge demand. Just to give you some simple statistics, the trade among COMESA countries stands at 23 billion United States dollars. And yet the potential for that trade stands at $90 billion. And what is required is investment in order to increase the productive capacity and competitiveness. And secondly, for those investors that are seeking natural resources, and we usually describe them as natural resource seeking investors, this is a region where, again, you will find investors that we have a lot to offer in terms of our natural resource endowment, but not only for exporting in their primary form, but for beneficiation and also using those natural resources as a basis for industrialization, including, agriculture. Now, for the efficiency-seeking investors, it's very interesting that when we look at what is happening in the region, we are finding that the countries in Asia, including China, that have been the global manufacturing, platform, are increasingly getting uncompetitive. And therefore, as the World Bank study has indicated, China alone needs to relocate 85 million labor-intensive jobs to this region. So these are the opportunities that are there for those that are seeking them. But let me also say that we also have the opportunities that no other region can offer, in the sense that we have credit and political risk agency, the Africa Trade Insurance Agency, which underwrites credit and political risk insurance, and that they've underwritten billions worth of investment for natural resources investment, for market-seeking investors, and so forth and so on. So, Your Excellency, let me simply say as I conclude that it is not for us today to talk, but it is for the investors that are here, to talk. But I just want to say one thing as I conclude, that the tripartite region continues to reform daily by improving the investment climate. Governance is improving. Conflicts, yes, we still have conflicts, but they're now isolated because under the African Union peace and security architecture, these issues are being dealt with to the extent that the African Union is even deploying, troops in order to ensure that those hotspots where there are conflicts, they are dealt with. So, in a nutshell, the investors who are here, Your Excellency, could not be in a better place. You can make your money. The returns are very high, on average about 28%, higher than what you get in the OECD countries where the returns on average are 8%. I know some of the investors will say to me, they are high, but the risks are also very high. I'll also then say, we now have market mitigating instruments for credit and political risks, working with ATI, working with MIGA and others. We've been able to see billions of investments coming to this region. Your Excellency, let me thank you again for hosting the summit, and we look forward to a successful outcome. I thank you very much.
Dr. Ngwenya, the Secretary General of COMESA, thank you very much indeed, sir, for telling, I think, a story that we're all certainly excited about on the continent, the tripartite free trade area. It's an incredible story unfolding. And as I said, there is a measure of excitement, and we hope that you as investors here are also excited about the enormous opportunities that he talked about in the various sectors, and also the unique instruments that are available for you to explore those opportunities. So thank you. We'll hear more about that tripartite free trade area during the course of the next 2 days. But suffice it to say that it is part of this great story that's unraveling. Right, now, ladies and gentlemen, it's my great pleasure to welcome our keynote speaker for this morning. It's under his patronage that we have been able to gather together for this key business summit. I think his track record in Rwanda, in the country, in the region, speaks volumes to his commitment and his leadership in moving this continent forward. People always hold up Rwanda as a shining example of what is possible when you do the right things and you have the right will. So we look forward to listening to Your Excellency in a panel coming up shortly. But can I call upon you now to say a few words as we begin this 2-day journey on how we can accelerate African economic integration through trade and investment. Ladies and gentlemen, please put your hands together for the President of the Republic of Rwanda, His Excellency Paul Kagame.
Your Excellency, Yoweri Kaguta Museveni, President of the Republic of Uganda, Honorable Ministers, senior government officials, distinguished business leaders and investors, Dr. Sindiso Ngwenya, Secretary General of the Common Market for Eastern and Southern Africa, distinguished ladies and gentlemen. It's a pleasure to welcome you to Kigali for the 3rd edition of the Global Africa Investment Summit, held for the first time in Africa. I would like to thank all participants, many of whom have traveled great distances to be here. I invite you to feel at home, to experience what Rwanda has to offer. The best meetings focus on concrete results, as this one aims to do. Let me commend the organizers and sponsors for their hard work and for setting the right tone. Progress in any endeavor is about valuing time highly and using it well. So we do not need to dwell too much on reminders that investment and good governance are critically important and that integration is profoundly in Africa's interest. We know it, we believe in it. What remains is just to be doing what is necessary to make it reality. The slow pace of implementation, often seen in various projects, is not caused by lack of knowledge, commitment, or resources, but rather by failing to appreciate that speed is the driver of wealth creation. This is because the benefits of growth compound exponentially, year upon year, decade after decade. It's not too much to say that the habit of tolerating endless delays is one of the major causes of poverty. If we in Africa start to value time even more highly than our friends and competitors, then the gap between ourselves and the rest of the world will start to close rapidly. Perhaps there should even be a financial penalty of some kind when deadlines are not met by public sector institutions. Whatever the amount, it would certainly be much less than what we pay now by assuming that the price of time is free. This summit's special focus on integration is very important in this regard. The tripartite free trade area is an initiative to join the East African Community, EAC, COMESA, and SADC into a single economic zone composed of more than 600 million people, which is almost half of Africa and some of the world's youngest and fastest growing economies. The stakes are high because this bold effort is a test of Africa's ability to translate ideals and commitments into reality. If the tripartite area succeeds, there will be strong momentum to push for the continental free trade area as directed by the African Union Summit last year. But if we get stuck, then the cause of integration could be slowed by years or even decades as confidence falters in the possibility of meaningful collective action amongst African states. A strong and clear voice of support from the private sector will be very essential for sustaining the political will required. By qualifying the benefits or by quantifying the benefits of integration compared to the status quo in terms of increased jobs, profits, trade volumes, and tax revenues, we can more easily keep everyone moving in the same direction. Let us work to address outstanding issues so that the tripartite agreement can come into force as soon as possible. In some parties, if some parties are not yet ready, that's fine. Those who are can move forward while always leaving the door open for others to keep joining at their own pace later. Good momentum and tangible results will do more to increase support for integration than any amount of closed-door negotiation among technical experts. Africa cannot just remain a story about huge potential that never materializes. Something has to give. Postponing our priorities and delaying our commitments are the most expensive mistakes that Africa can make. There is nothing we are waiting for, and nothing we lack. Let's work together across sectors and borders with the right mindset of urgency and build the Africa we want. I wish you productive deliberations in the coming days. Thank you very much for your kind attention.
Thank you very much indeed, Mr. President, for your insightful words. We certainly do have some challenges, but as you said, we have the skills, we have the knowledge, and we need to almost get out of our own way and get these things done. We need to act urgently, especially when it comes to this tripartite free trade area, given the importance of regional integration. We need to make it happen. So thank you very much indeed for opening, I guess, this conversation that we're going to be having, not just about this free trade area, but accelerating the process of, we talk about this continent being this new frontier. Well, we have everything that we need to do. We just need to get it done. So, Mr. President, thank you very much indeed for sharing your thoughts with us. Thanks, too, to Mr. Gatare, Mr. Hudson, and Mr. Ngwenya. If I could just say thank you very much indeed for joining us on this panel. Thank you so much. Mr. Gatare. Thanks. Mr. Ngwenya. All right. Now, the reason why these three have made their way is because I'd like to introduce two more people that are going to join our presidents here on stage for our next panel. So if you could put your hands together for the president and CEO of the PTA Bank, Mr. Admasu Tadese. Thank you very much for joining us. Welcome to you. And the Chief Executive Officer of Symbion, Mr. Paul Hinks. Welcome to you. And this next session, this panel that we're going to be exploring now is all about the conference theme. And to take us through that, please welcome the Africa correspondent, CNN Money, my friend, Eleni Jokos.
Ladies and gentlemen, a very good morning to you, Your Excellency, Mr. President Kagame, Your Excellency, Mr. President Museveni, my distinguished panel, distinguished guests, thank you so very much for joining us today for the launch of the Global African Investment Summit here in Rwanda. We're going to be embarking on our opening panel this morning and hopefully setting the scene for what is to come in the next couple of days. It comes at such an important time on the continent, given the fact that sub-Saharan African growth is expected to just clock in at 3%. And I say just 3% because a couple of years ago, we saw growth of over 5%. We saw a lot more money flowing into some of the countries that now are perhaps teetering on recession. Some of the big economies in Africa have been plunged into recession. 3% growth is not enough to put a real dent in job creation, and, of course, to put a real dent in poverty levels that we're seeing in many African countries. But it's not all doom and gloom. There's so many good stories to tell, and one of those things that is going to create a catalyst to increasing economic growth on the continent is that tripartite free trade area, which was launched last year. Now, 17 countries have agreed to it. 26 countries overall need to sign this agreement. It needs to be ratified. There are still a lot of issues that need to be thrashed out, but there's a deadline for 2017 to get this going, and this is going to create a huge benefit. Numbers of $3.3 billion annually is what's being discussed at the moment, but it's going to take political will. And we're going to discuss some of these issues this morning. President Kagame, if I could please start with you. When we talk about free trade areas, the EAC has been such a shining example where you've got intra-EAC trade sitting at around 23%. What is your prognosis of this regional trade agreement and whether we can achieve it and get it done by 2017?
Well, first of all, I think there is this wrong assumption maybe in minds of some people that there is no real cost to delay in implementing some of the things we have to do. And yet, there is actually a huge cost. And maybe the public sector people in our countries or regions think we have all the time in the world to wait to do some of the very things that will put us where we want to be. But in actual fact, much as we may have all the time in the world, it's also a question of the choice as to how you use your time, whether you choose to use your time for business, for making money, for prosperity, or use your time to keep sinking deeper in poverty. But I think the choices are very clear, and that's why some of the things are already happening in the free trade areas that are being created and with the intention later on of merging them. And we are seeing very good progress in the East African community. There has been very good progress, integration in many aspects of our economies, but still we want to even move faster. We are not where we want to be. We want to move faster, and I think in the few coming years we should be seeing significant steps and results thereof. So whether it is the common market, it's a customs union, we have been working on monetary union, and there has even been discussion about political federation. All these are really under discussion for the purposes of seeing how, where, and how faster we can integrate for the better of our economies, for allowing people to do businesses, and therefore our citizens benefiting in the end.
President Museveni, you talk about bottlenecks that are hindering the continent. One of those, you talk about small internal markets. And of course, when you look at the notion of regional integration, you look at a common market, that will obviously be one of the things that will move away from the small internal markets that we speak of. How confident are you that there is going to be political will? What are some of the issues that you think we're going to come up against in the next few months when it comes to the new free trade area that we're talking about?
Well, it's a question of knowledge and harmonization of knowledge. At independence, it was not clear to our leaders that integration was one of the stimuli for growth and transformation. So there was quite a bit of wasted time until 1980, when there was a meeting in Lagos, and they brought it up that Africa should be organized, should be integrated, should become one market, the whole of Africa, not just the tripartite area you're talking about. That's how they went for the 4 blocks. COMESA for Southern Africa and Eastern, ECOWAS, there was supposed to be Maghreb in the north, and something in the center. So some of the leaders saw this, but that information was not clear at all. What the president is saying, some of them don't appreciate the lost opportunities. So it is like a river flowing. You will get the current, but you also get counter currents. But what is clear now is that the current of moving forward is much stronger than the counter currents. So, although there are some delays and so on, more and more people are aware that integration is the way to go to cure the problem of smaller markets.
President Museveni, if we could just also touch on the fact that so many countries have noted that once you embark on liberal trade tariffs, once you embark on elimination of barriers, that there is a risk of opening the floodgates to very cheap imports from other countries, and then that would kill the local industry. Being part of the EAC, has that been a concern for you?
That what?
That it would open the floodgates to cheap imports, and it would kill the local industry.
If we integrate?
Yes.
Why? We can have a common external tariff and negotiate balanced trade with other partners. There are mechanisms to sort that one out. There is a medicine for it. You put a common wall. It is called Common External Tariff, CET. So there is a solution to that.
And you think we could come up with those solutions as we negotiate our way into these trade agreements?
Absolutely, because we can have a common tariff. In fact, we have it. For the whole of East Africa, we have it. We have what we call CET. All of us have one common tariff for external goods. And if we are, the tripartite area becomes a reality, we can have similarly the same barrier for the outside imports.
President Kagame, I see that you're agreeing there. And I say this, and I mentioned the opening the floodgates to cheaper imports, which makes local industry perhaps uncompetitive. We've been beating on this drum about regional integration for a very long time. Has that, in your mind, been one of the issues where there's concerns on making local industry uncompetitive? Has that come up as we embark on this new journey?
This will come up for discussion. But let's consider this also against the backdrop of the fact that there is more trade going on between Africa and Europe or other parts of the world than the trade that goes on within Africa itself. Why doesn't this get corrected, which in the end may actually give us some of the answers to the questions we are raising, because we are always looking at ourselves doing business with others and not doing business with ourselves. Yet if we increased intra-African trade, some of these actually problems would be addressed in some way and would not be worrying about one another. For example, if we have to increase adding value to and processing some of the things we have to get done from outside and done from our own raw materials. So opening floodgates for things to come from outside there and come to us, some of these things are actually things coming from Africa, going out there, and then coming back to us. So if we can reverse the process. We can actually do these very things here in Africa.
Value added.
And that's the most important.
Mr. Tadese, you're a banker. You focus on trade and development. Of course, that is the mandate of PTA Bank. Is the money flowing into the continent right now? Given the worries on economic growth, given the currency fluctuations, are you seeing interest?
Good morning. The short answer is yes. The texture of the answer is the flow, of course, is not even. There has been, of course, a slowdown, as you mentioned, but the reality is there have been very positive continued trends in many parts of the region. And of course, this part of Africa has been on that positive side. I think you talked about a 5% benchmark during the heydays of the Africa Rising narrative. Well, today there's at least 6-7 countries that are still growing well above 5%, and actually quite a few of them quite high, 7-8%, some even trying to test the 9-10% mark. And these are not small countries. You're talking about countries of 50 million, 40 million, 100 million. So even Egypt, which was down, which is an outlier like South Africa is, has bounced back, and Egypt is growing at about 4% now. So if you really look at the growth story, it's just a little bit more nuanced. I think if you were just to recount the list, it's Uganda, it's Kenya, it's Rwanda, it's DRC, it's Mozambique, it's Ethiopia. These are the countries that are still growing very strongly. And as a bank that covers these economies, we see very strong demand from our international partners who fund PTA Bank to actually provide that intermediation service into these economies. So it's growing, and I think if you were to look at foreign direct investment as another indicator, you would in fact be pleased to see that the highs of foreign direct investment, which was around 58 billion in 2014, just before the commodity price plunge, it's pulled back to about 54 billion by 4 billion. But still, if you look at these economies I spoke about, they're still holding very nicely, and the FDI levels are still pretty much where they were in 2014. And if you look at FDI in general, it's actually almost double the levels we saw in 2007. It was sitting at about 3% of global flows, and it jumped all the way up to 4.6%. That's almost double, right? 6% would be double of 3. So I'm just sort of trying to highlight that there's still a lot of positivity, which is probably why this room is full. And we get a lot of interest, actually, from all sorts of investors, including the gentleman here on my right, who continues to show strong appetite for the region.
And I'm glad you mentioned that because, according to the TGAIS, an independent survey that they embarked on, $200 billion waiting to enter the continent. And that is how much money is sitting on the sidelines looking for bankable projects. Mr. Hinks, Symbion Power, you're a Washington, D.C. based firm. You've done business across Africa, including Rwanda, Nigeria, as well as Kenya, to name a few. But you've also worked very closely with U.S. investors wanting to do business on the continent. And given the fact that we are focusing on the Global African Investment Summit, what kind of appetite are you seeing right now? What are the questions that people are asking prior to bringing money to the continent?
Morning. That's a very interesting question. And in fact, very recently, President Kagame asked me the question, what is it about in the United States that they come to the conferences, they talk about investing in Africa, but they don't come in the numbers that you would expect for such a large pool of capital? And you're right that I spend a lot of my time working with investors, particularly in the US, as the chairman of an organization called Invest Africa. And what we see is we go to these conferences, and you see all the private equity firms there, you see banks, you see high net worth investors. They attend the Africa events, and then we meet them again and again and again, but we don't see them investing. Now, there has been American investment in Africa over the last 10 years, more so. But there is such a huge amount of equity out there and debt out there that could be deployed in Africa. But what I see, the way I would personally describe it is there's a huge void between those people who want to invest and Africa itself. So, first of all, we talk about Africa. Well, it's 54 countries, we all know that. And Rwanda is a very different place to the Central African Republic, for example. Uganda, the same. So it's very difficult to describe Africa as one entity. But that's what they tend to do. They look at it and they say, there's all these things that we see on TV. Unfortunately, people like CNN like to tell the bad stories, not the good stories.
We're trying to change that, of course, through our African features, which are quite positive. I'll send you a few links.
But there are so many good stories going on in Africa, and there are investments which are successful, and it's an exciting place. It's a nice place to work. So our job with Invest Africa has been trying to educate people about working in Africa and what the risks truly are, their perception of risk. I mean, I've been working in Africa for 34 years, and my perception of risk in certain countries is very, very different to a first investor coming to the continent. So what we need is a sort of education process on that side to teach people, the private equities and the people with the money, about the deals that there are in Africa, the success stories, and not just failures or wars or conflict. And then conversely, on the African side, I often see that officials in ministries and the like do not understand the private equity people. They don't understand that they're managing other people's money, that's pension fund money and this type of thing. And therefore, they have to check everything so they don't make a mistake and take some pension fund money from an institutional investor and lose that money. They've got to give a return. So if this void could be filled and people from outside, and I say I'm specifically the United States where I live, if we could fill that void somehow with the help of people like CNN, I think it would make a huge difference.
Well, I have to mention, we were recently in Rwanda and we went onto one of your smart buses, Mr. President, and we did a FaceTime call with your minister. And we spoke about how Rwanda is developing. It's moving on the ICT front. We also visited a laptop factory. We went to one of your textile factories as well, here just outside Kigali. So there is a lot of progress that is being made in terms of increasing industrial capacity. And to be fair as well, general news versus business news also is quite different. How do we bridge that gap, Mr. President, in terms of we tell the good stories on the ground on the business front, but the general news stories tend to be slightly bringing out the more negative side, if I could say, just like most general news stories do around the world. How do we get investors to focus just on the business side of things?
Well, maybe it also means there is not just one side of the story. You have to look at the story as a whole. And even the investors want to just focus on business because business activity is taking place in the overall environment that has to be there. So while you are looking, you may focus on business alone. It won't take a long time before you are reminded that you are affected by something else happening outside of the business. So it has to be one story that takes care of all those different elements of that. So firstly, we have to create this environment. There has to be good governance is part of it. And put in place the elements that support doing business. But it has to be an overall environment that allows that to happen. And therefore, the two really are integrated, different parts of the same story. While bad things may be happening in one place and good things are happening also, you have to look at what is it that is lacking in order for the whole story to be as good as people want it. So there is no such way of disaggregating business and taking it out of the overall situation and therefore having only a story for business and a different story for different things because they are all part of one single story of a country or a region or our continent, if you will. So, but telling the story has to bear in mind the context, the causes, and also the efforts that are in place for people to deal with what needs to be dealt with, the kind of negative stories. Also behind that, there are these efforts of trying to actually deal with the negative stories or the causes of negative things that are happening. So telling the story must be comprehensive, must look at the good, the bad, but also understand the context and the causes of all that.
President Museveni, when you speak to international investors, what are some of the questions that they're putting on the table? And what are your concerns in terms of ensuring that you lure in those investors?
Well, many of the investors have forgotten the logic of business. They don't seem to remember that business means two players, the producer of a good or a service and the consumer. And if you don't have the two, you will get into crisis. And that the two are linked by infrastructure to link the two, the consumer and the producer. That was the problem in 1929 when there was a depression. Recently, when there was a big demand in China, you saw how commodities went up in price, and now you see how they have come down. Now, the next big center of growth is Africa, in spite of the forward movement and backward movement. So anybody who has got a strategy of business, Africa is the next big pusher for the global economy. There will be there's already a lot of building houses, so that means the demand for cement, demand for steel is going to be here. Is here and is going to be here. So what you were asking was the negative stories which frighten some people really cannot be a good reasoning. I think the bigger problem is lack of knowledge, because the negative stories are not in all parts of Africa. They're in some parts. So why don't you go to where the story is good and you start there? But secondly, where the story is good and where the story is bad, eventually we'll link up. We'll link up. If you came here in 1970, there was a lot of chaos here. Mozambique was not yet free. Angola was not free. Zimbabwe was not free. South Africa. But now, what was a blocked area is now an open area. So the story is improving, and Africa is the right place to be now, in spite of that is for a strategist business person. And I can tell you that the Chinese seem to know more economics than I think they have been to university more recently than some of these other people. They are coming. So that perception, they know where to go. When there's a problem here, they see where there's no problem. They go where there's no problem, then that is a base to operate even where there's a problem eventually.
So how do we get the US investors to think the same?
Teach them more economics.
Mr. Hinks, there he goes. There's your answer, Mr. Hinks.
Yeah. I think the answer is we probably should join up with the Chinese.
Yeah, perhaps. Mr. Hinks, I mean, just listening to this conversation, and it's true. We can look at the positive elements, the countries that are very politically stable, that have stable economies. But I'm sure on the top of investors' mind is also currency fluctuation, safety of whether capital controls are going to suddenly spring up, and so forth. How do you deal with those risks? And the reality is perceptions of risks towards Africa has changed. Since the financial crisis, there's a lot more appetite, but it's obviously not enough, right?
Yeah, like I say, the perception of risk changes with everybody. So my company, Symbian, before we actually started working in Africa, we were working in Iraq and Afghanistan. And then we came to Africa and we started some business in Nigeria. And everybody said to me, "But aren't you worried about the risks?" But relative to Iraq, it was like a tourist destination. It was fantastic. So there are all these things, and what I was trying to say before is if we understand one another, and those things that people think are risks, they tend to disappear. So, I mean, I can talk about our project in Rwanda, in Lake Kivu. We have a project to build a methane gas. Lake Kivu, as you probably know, emits methane gas. It's the only lake in the world that does. So we will be building a 56 megawatt power plant on Lake Kivu. And when I first started talking to bankers, fortunately, PTA Bank, they understand things a lot more than some of the other bankers that I've been talking to, and private equity firms who wanted to join in with us. And I told them, we're going to extract methane gas from the lake, put some barges on top, take it to the land and produce power in an area where there's a volcano next to the lake. They all thought I was crazy. But as they came and did their due diligence, and they went to the lake and they saw that there are already 2 existing projects on the lake producing reliable electricity, everybody changed. And now we have a line of investors and bankers who want to come in. And they want to come in also because Rwanda is considered as the best, or one of the best destinations in Africa to invest. And we get things like guarantees. And I can tell you, just to add to that, I've been doing business here now for 2 years. I love the place. It's fantastic. And doing business here is infinitely different to many other countries in Africa that I have done business. So I wish that everywhere could be like this. It would be so much easier. So so as I say, it's about the perception of risk, and the only way to get through that is to educate people about the countries and get them out here and get them to understand the business and the political climate in each of these countries.
Well, let's ask Mr. Tadese, because you follow the money, you give out the money, so you can tell us about where it's flowing, and also some countries that are slightly more risky than others. At the end of the day, we can talk about these risks, but things go in cycles, and at the end of the day, Africa needs power. It needs value-added products. It needs processing plants and manufacturing plants. And these are going to be some of the things that are going to create that catalyst for growth. So what are you seeing right now by way of risk versus other areas that are not that risky?
Yes, Eleni, the money actually does have a mind of its own, and it does because it follows growth, it follows performance, it follows commitment. So, there is a way to attract money, and I think it's well known worldwide. It's in the economics books, as His Excellency mentions. And basically, from what we've been seeing, the behavior of financiers, equity investors, is very much in line with that. If you were just to look at current trends of ongoing investment, let alone new money coming, just existing investment that's continuing to happen, that alone will give investors here, financiers, an idea of what to expect around the corner the next year or two. Fixed capital formation, many people will know that the 6% magic growth target that the African Union had set some 10 years ago, the magic bullet was always seen to be, among other things, 25% minimum levels of fixed capital formation. And if you were to ask me now, what is the level of fixed capital formation in the region, I can point 6 countries to you that are above 25%. I can point 4 countries to you that are above 30%. When you start going, you're looking at East Asian tiger level of fixed capital formation.
But are we seeing corresponding growth with those levels?
Well, absolutely. In fact, the countries that I was highlighting as being still fast growing, these happen to be the countries also where you're seeing high levels of fixed capital formation. And everybody knows that that is a lead indicator of future growth and future diversification, because fixed capital formation creates the foundations for industrialization, for manufacturing, for agribusiness, and for the trade that everybody wants to see. Trade historically has been difficult amongst countries in the region. The reason being no diversification. And now with much more infrastructure and much better institutions, there is going to be much more scope for that kind of interregional trade. I think many members here will know that the Eurobond experience of Africa has been quite profound in recent years. Even after the commodity crash in 2015, after the US Fed started to increase rates, after that, the region has raised $6 billion of Eurobond money. This year alone, 2016, there are several issues still expected to happen. Several countries from East Africa, but even a big country in West Africa that has been referred to in our conversations, they're still looking to issue a Eurobond, and we're told there's appetite. South Africa, with its difficulties, has also raised a Eurobond. So I think, again, the question of flowing money is not just about what we think. I think it's also useful to look at what's actually happening. So I think it's a question of risk appetite. I think for investors to see money still flowing will give you that confidence that you're not alone, that there is actually continued appetite. And that is the hard reality. Even my own bank, we've been growing at about 25% per annum, and that high level of growth continues to be the case. And we're raising money not just from the Chinese, who always invested in it.
This was my next question. Where are you raising? Where's this money coming from?
Japanese. Last week in Nairobi, I signed 3 agreements with 3 Japanese financial institutions that historically would not touch us because we were considered to be risky. But at the TCAD conference, I think with all the push and with all the demonstration that Africa has been showing, the Japanese, who've historically been quite conservative, are coming with very strong force. And so it's not just coming from 1 or 2 traditional sources. It's coming from a diversified space. And even the United States is showing very strong interest. We're raising money from the U.S. in ways that we never have in the past as well.
President Kagame, what do you hope to achieve for Rwanda? We know that you have ambitious plans, but through the years you've proven that you've been able to hit a lot of those deadlines. President Kagame, tell me a little bit about what you hope to achieve for Rwanda over the next few years. You've been able to set a lot of ambitious plans, but you've proven that you've been able to achieve most of those targets that you've set in place.
Well, first, there is a story of growth. Our economies have to keep growing. Rwanda's is no exception. We want it to grow, we want to keep it growing. So sustainability of it is key. And there are these key areas that one has to look at for that sustainability. One is the overall stability of the country and the governance systems. The other is the investments in people who have to have its human capital, its skills and services thereof. It's the infrastructure which President Museveni earlier mentioned, that really link all these things that we have to be doing in business. So that's what we have been doing. We've been looking at these key areas of investments that within the stable environment we have, will sustain our economy and keep growing. That's why we have registered continued growth for the last now 15 years. But between 7 and 8%. It's because of focusing on those things that matter, that allow sustainability to happen, involve people being part of the growth that is happening, provides stability as well. So really for us, that story is built on the desire to see these growth areas focused on and working in a much wider space of business and trade, like through integration, which you earlier on talked about. Integration has been part of our continued growth as well, and I'm sure that's happening in other countries in the East African region or other integrated spaces on our continent.
And of course, you've also been one of the most competitive economies in Africa as well. How do you achieve this, given the fact that you're a landlocked country? You still have a lot of logistical issues that you need to deal with. What are some of the things that you need to put in place to maintain this growth momentum that you speak of?
See, when I talked about investing in people, skills, when people have knowledge and skills about what needs to be done and produce high-value goods, these are things you want that won't be affected by being landlocked, as we are. So that is exactly the point I was talking about. When we have invested, say, in information and communication technologies, when we have invested in high-end technologies to serve and create the kind of industries we have created, that is the meaning of it. We are actually avoiding being affected by being landlocked, by being far from the ocean, whether it is through Mombasa, where we take things through Kenya or through Tanzania to Dar es Salaam. The services that can be provided through high tech, through good skills and knowledge, won't be affected by this. And that's what we are beginning to experience. And again, when we see the integration of the region we live in, like in the East African community, even integrating through technology. For example, when we created an integrated network for the East African community, where people can call from Kigali, from Uganda, Kenya, South Sudan, without having to meet roaming charges, as if you are, communicating within one country. That is huge. It has made a big difference. So that has allowed integration to take place using technology. This makes big sense, in a sense of not being affected by being landlocked. That's one example. There are many things happening already.
And of course, a visa as well, that kind of goes across various countries.
Free movement of people. People move freely across borders. We have seen within our region specifically, the East African community, people just use IDs to cross borders and go about their businesses across the border in a neighboring country of our East African community. Work permits are no longer a hindrance. So there is this free movement of people again and good.
Do you think this could be a vision for Africa, the free movement of people?
Of course.
Because it's been a contentious issue on the visa front.
No, it has always been the principle. It has always been on the wish list of the Africans, wherever they are, wherever they come from. They want to move freely across borders. This is not happening as fast as everybody would wish, but already things are happening, beginning with the East African community. We are seeing that happen. And we are seeing it, for example, as far as Namibia. I was seeing the other day Namibian leaders, allowing Africans to move to Namibia without having to apply and wait for visas. So it's happening. It's slow, but it is happening, and we want to encourage that movement forward.
President Museveni, do you also, what are your thoughts when you look at the successes of the EAC? Are you pro free movement of people in the rest of the region? Do you think it's something that we could see happening? Because with liberalizing tariffs and becoming a common market, that would also mean trying to get people in and out of country very easily.
Generally speaking, the situation in Africa is very good. You have been talking of high rates of growth of the African economies, some of the African economies. Many of those economies have been growing in spite of the bottlenecks I have been speaking about. But now, many of those bottlenecks are being addressed. Some of the bottlenecks are hardware bottlenecks, roads and so on. Some are software, methods of work. And in a number of countries, they are being addressed. So freedom of movement of people is one of the software. Because that one is just a policy decision. You decide and people move.
Do you think there will be political will to create the free movement of people?
Where logic will force people to see the political will. Yeah. Because if they don't, the economies will not grow. Yeah. If they don't grow, they will collapse. You have seen groups collapsing because they are not responding to reality. Reality is that to create prosperity, we must utilize the huge African market and also link up with the external markets. If you don't do that, you don't grow. Fortunately, in Africa, it's not like Europe, where you have got women who don't produce children. Here, the African women are producing children. So if the economy doesn't grow, you are sure you will get in a crisis. So for me, I'm not very worried. I think either willingly or unwillingly, African leaders will move.
Mr. Terese, what would a common market mean for you if we integrate COMESA, EAC, as well as SADC? What would it mean for you from a development and trade financing perspective? Would it make your life easier?
It certainly would, and let me give you an example. An example would be the power sector. We have a sector that is very sensitive to scale economies. So if the region were to be integrated, one could pursue large-scale projects in countries that have very nice endowments of energy, renewable energy, among others, and you can actually reduce the cost of producing power across the whole region by producing smartly in that way. And so if you had the trading arrangements, if you had the transmission lines, if you had the commitment and the trust that goes with that, then you could really, for instance, in that specific sector, produce very high levels of efficiency, which we all would like to see. I thought I would maybe just give you a sense of this concept of commitment that we've been talking about. His Excellency President Museveni mentioned that commitment is there. Now, if you look at the recently released survey, annual survey of the Doing Business Indicators worldwide that the World Bank does every year, and if you look at the top 10 countries that were best performers, there were 2 that were from this region this year, which I should mention. Uganda and Kenya, amongst the top 10 in the world. That is true commitment. It's not just talk. And just so I don't miss the other point, I think if you look at 2014, this region made history with one country jumping 20 ranks in the history of the world. It's never been seen, 20 ranks, and that was the case of Rwanda. If you look at Botswana, Seychelles, Zambia, Kenya. If you look at the top 10 ranked countries in Africa in terms of doing business, they all happen to be in the Grand Free Trade Area from Cape to Cairo. If you were to look at the list of 54 African countries and say where are the best ranked countries, actually the top 10 all sit in the Grand Free Trade Area. If you look at the top 20, 15 of the 20 sit in the Grand Free Trade Area. There's a reason why there's so much investment appetite in this region.
Mr. Tadesse, just also on that point where we look at regional bodies, trade bodies, and I'm going to say this again because this has been the reality for me as a journalist through the years, that we keep beating on the same drum. We talk about regional integration, we talk about common markets, we talk about liberalizing tariffs and so forth. Do you think it's happened fast enough? Do you think we can actually do it? And do you think there's going to be that commitment that you speak of? Because we've gotten commitments, especially from the East African community, but do you think that we're going to get 26 countries to get this ratified through Parliament in time?
Well, I may not be the best person to speak to this. The Secretary General for COMESA is here. He may have some better insight than I do. But I think when it comes to the power sector, to come back to that theme, we've seen transmission lines now being built very proactively. Kenya, Ethiopia is one. We see a lot of focus now on the Zambia, Tanzania, Kenya interconnector. So there is very strong developments in terms of transmission lines. And even within countries, we had a project of a mini hydro in the case of Uganda, and there was a mini hydro project that was not connected to the grid. The government had to commit to actually build a transmission line from that mini hydro to the big grid, and they did it. They did it. There was a delay, but it was done. And so the investor, it was actually an independent power producer project. And they're very happy. In fact, they're moving to phase 2 now, and we're going to be financing them on the second round because it's been so successful, despite the delays.
So, Mr. Hinks, when it comes to regional integration, we want to look at economies of scale, you want to look at logistics, and you've got to look at power. And this is your ambit, this is your game.
Yeah.
How do we solve the very big power issue? And as Mr. Tadesse was talking about, is getting project sharing across the region.
Well, first, before we get into project sharing across the region, some of these issues are close to my heart. So I can tell you there are some fundamental things that investors need to understand, first of all. Number one, that Africa is not a rich continent. So it is in terms of resources, but the people are not wealthy. They need to pay for electricity at a cost they can afford. So it doesn't make any sense for investors to come in and set up power plants and try to sell electricity at tariffs which are crazy, particularly when you start thinking about the natural resources which are used. So I'm a firm believer in not just having renewables, a broad spectrum of power fueled by a country's own natural resources. So in the case of Rwanda, they're using hydroelectricity because they get free water, rain, and they're using methane gas from the lake on Lake Kivu. Now, it makes no sense when you see very high tariffs coming from something which, for example, does not cost any money, the fuel. So hydro. I've seen tariffs in some African countries where I don't understand how we can sell power in Tanzania to cost, inclusive of the gas which we buy from the government, at about 8.5 cents. And then I see tariffs for hydroelectricity with water coming from the sky, rain and dams, and the tariffs are a lot more than that. So how is it that no fuel, but it costs more money than a project that produces power with gas?
Do you think this is a thing of private investors wanting big margins? Is it because of access to capital that funded the project was expensive? Is it because there's no regulation in the country, energy regulator, that is regulating the tariffs? Is it a combination?
And greed.
And greed.
Yeah, that's what happens. And the point I was trying to make is that, first of all, people need to understand that the objective should be to still make your rates of return, your 20% or your 18%, whatever you want to get, but keep the cost down so that the end tariff which you sell to the government at is lower, and then the government can sell electricity to the people, and the people can afford to pay for it. And that's the constant dichotomy you see in Africa of tariff issues, and they're always there. So I think that step one is we have to have, if we're going to have private power or public power, the cost of the electricity should be the lowest you can get. Then you can start talking about what they call wheeling power between countries, because then you can sell cheap power from Lake Kivu in Rwanda to Tanzania, perhaps, through a network. You will never do it where you have expensive power, and it's even too expensive for that country. Nobody else is going to buy it. So it's a question, first of all, of getting the base cost, then building the transmission lines and the transmission links, and then having these wheeling agreements and cross-border agreements. And they're very difficult to do, because obviously some countries who may not have sufficient power are concerned that this power could be disconnected at some time. And it's not just in Africa you see this, you see it all over the world. So it's totally possible, and if the base cost was low enough, I think you would see much more of that happening. It is happening. Tanzania and Kenya, and Rwanda are building lines at the moment to connect to each other. I think Uganda already has a connection to Bukoba in the north of Tanzania. So the connections are there. They just haven't happened as fast as they could have done.
Okay, we've got around 7 minutes left. I'm going to ask the final question, and if you could include your closing remark, and of course this is going to sort of set the scene for the rest of the conference. Mr. Tadesse, I'm going to start with you. There are fantastic, exciting industries that investors are looking at, but as we've highlighted, investors want to make a return. They want to ensure their money is safe. What is your prognosis right now? Where do you think the money should flow?
I've always believed in performance, so I'm going to say that the money should continue to flow to those countries who are building infrastructure and who are reforming the institutions, the policy frameworks, and holding public institutions to account. I think money should flow to those countries, and they already are. It's not because anybody's saying it, it's just the behavior of money. I think discipline matters hugely. That's why we're here at this convention center. It was built, and we came. That's always the motto, build it and they will come. Infrastructure, I think, is a leading indicator for future success. So anybody who wants to come and invest in agribusiness or industry or business outsourcing, whatever may be the case, just look at the countries that are investing heavily in infrastructure. That'll give you a good sense of where you'll make good money.
Mr. Hinks.
Yeah, I would also add...
You're going to say power, right?
Sorry?
You're going to talk about power, correct?
I would say... investment capital money takes the least path of resistance too. Yeah. So I think if you find good investors, and there are many of them, and you have countries where, as President Kagame mentioned earlier, governance is very, very important, it will happen. And over the last probably 10 years, we've all seen the Africa Rising stuff and the like. But the reality is there is a lot more activity and a lot more interest right across the continent today than there probably ever has been. And just to add a point about the Chinese, I've witnessed in my lifetime the Chinese entry into Africa, and they've done a fantastic job. So many times people in the West say, well, the Chinese are this, that, but we probably wouldn't have the road networks and many other things that exist today had the Chinese not done such great things in infrastructure in Africa. So for me, it's let the Chinese keep coming and investing in this type of thing, and let's hope that we can convince some of our compatriots in the United States and co to get their act together and get out here too.
Fantastic. Thank you very much. President Museveni, what do you hope to see from the conference in the next couple of days? Are you hoping that we're going to see some deals signed? We've got a room full of interested investors. What do you think the best sectors are to focus on, sir?
Well, I just want to inform them that Africa is the right place to come. As I've already said, there were bottlenecks which we are handling with our own money, because we have quite a bit of money now. And if the investors can come in, it will make the work easier. They can invest in electricity. They can also invest in value addition to the agricultural products, to the minerals. They can also invest in human resource development as private operators, hospitals and schools, and the African middle class, which is expanding, will buy their products. Look at the mobile phones. I didn't get the figures before I came here, but in Uganda now, I think 30 million people are using mobile phones. This is supported by the purchasing power of the population of Uganda. And by investing in mobile phones, those companies help the government. We don't bother with that anymore because they solve that problem of communication using the private sector. So therefore, the areas to go into, governments will deal with the infrastructure in many cases. We are building the railway, a modern railway, using money we are borrowing from China. We are building the roads, but the private sector can come in value addition and in some aspects of the infrastructure, like power. I'm very happy with the other man, the American, because he has talked about greed. The greedy people who come and want to recover money very quickly. High tariffs of electricity, for electricity. This is not good. And that's why we are withdrawing a little bit from the private sector as far as the electricity is concerned. Because if you make electricity very expensive, you undermine the industrialization effort of the whole economy. And we cannot accept that. But if you have got Christian-like investors like this one, I think we can move very well together.
President Kagame, I give you the last word, sir. What is your hope for the continent in the next couple of years, given the headwinds that we've seen, but also importantly noticing all the fantastic progress that we've been making, and the consumer is rising, there's still excitement. How do we stay on this path?
I think the fundamentals are all in place, one way or the other, and the story is also very clear, and nobody would claim they lack knowledge about what Africa offers. And the prospects should be about how do we, investors, private and public, because public does investments as well, how do we build on this actually very good story, and as I said earlier, and move from rhetoric about many things we can do and match that with reality, because the reality has to happen. We have to do things, we have to get results, we have to see continued growth, we have to see development of our people. And the opportunities are there provided by immense resources that the continent has, whether it is human capital or natural resources, the opportunities that are there for investment in infrastructure that will connect different ends for business to thrive and prosperity to happen. I think this is something that we can keep focused on. The bad stories will always be there. By the way, earlier I wanted to mention that talking about risk perception and so on and so forth, as if sometimes it gives an impression that risks only happen in Africa. I think these people, wherever they are coming from, we have found that they are coming from places where there are more risks now than there are in Africa or than there used to be in the same places they come from. So I think there shouldn't be pretext about things. We should face up to these challenges, and there are tools to work with. There is commitment. The problem still remains in the area of how do we connect these dots and really make sure that the story is coherent, is strong, and is built on the very reality that Africa needs to see and to experience. I think the investors, the business people, the leaders in this room have been part of what study the story, they understand it. I think I can only make the appeal that let's work together as one team. Let's keep pushing one another to cross the line that we need to cross, and without any excuses for not doing that.
Fantastic. Thank you very much, sir. I'd like to thank my panel, His Excellency the President Paul Kagame, His Excellency the President of Uganda, Yoweri Museveni, CEO of Symbion Power, Paul Hinks, and the President of PTA Bank, Admasu Tadese. Thank you very much, gentlemen, for your insights this morning. I wish you all a successful and fruitful summit, and hopefully lots of deals will be signed over the next 2 days. Ladies and gentlemen, thank you, and I now hand over to my colleague, Peter Ndoro.
Ladies and gentlemen, please, if we could just stand and say thank you very much indeed to